once again. This is the 11th lesson. So this is lesson number 11 from our main strategy, and I am covering the key entry strategy, which is the last segment of the course that you really have to master for you to actually get to that consistency level. So I'm going to be showing you guys how I get my entries and how I try to actually minimize the risk that I put into the trades, particularly because we want to maximize on our entries. So you guys would know how I personally trade, that I try to flip accounts like to create the amount. So if you want to have a crazy risk appetite like myself, you really need to at least have the best entry point before you can actually think of scaling in. So I will be showing you guys how I get my entries using our levels that we have on the chart. So what I need to point out is that the market will give you multiple areas of entry points. Like the markets will give you like a lot of areas that you can use to basically find entries. So I'm just going to be using this area as the first level of interest for this particular example. All right, so suppose you're trading, let me just, for the sake of this lesson, I'm gonna have to at least use the replay tool. Let me see if I remember how to do this, because I actually haven't done this in a very long time. So I'm gonna be trying to see if I do remember how to use this tool. But anyways, let me see. Replay, let me click on that. Okay, this is perfect. All right. So if I want to get an entry around this level, all right, if I want to get an entry around this level going up, what I would have to do is I will look at this market. Oh, if I change time frames, does it go back? Okay, that's beautiful. So what I would then do on this area, this is an area of interest, right? So I'm trying to find an entry going up with this market. So what I would then do is I would take my trend line, draw a line that comes from this previous market. I'm not going to go very far. I'm going to go to this previous support level. I'm going to try and draw a line that covers most wicks, which in this case is this area. So if you look at this area, right? If you look at this area, we did touch 1, 2, 3. So all three wicks are literally touching over there. So I will be looking at that area in future to basically find entries based on this support level. So this support level will then become an area in which I will be making entries at, right? So this is how we basically want to find entries, because remember that we buy low and we sell high. So when the market comes to this lowest point, this is when we actually look at buying. So this is the area in which we're going to be looking at multiple elements, which would be reversal candlesticks, which are very important in your trading career. Like in your trading, reversal candles are very much important, right? So you really need to understand reversal candles before you can actually start taking trades, because in most cases we do find support levels, we do identify proper levels, but we then fail to understand how to basically execute from these levels. So it is very important that we literally understand reversal patterns before we can actually start taking trades. So the market can either give you a double bottom situation, like in this case, where the market just comes, gives you the first bottom, and then gives you the second bottom over there. So this is a case that can happen on the markets. But however, we want to see these types of candles. These are the type of candles that we want to see on the charts. So these are the type of candles that we're looking at for basically making entries. These are the type of candlesticks. So if you look at this, right, this is a hammer pattern. So this is what we call a hammer. So these type of candles are called hammers, or shooting stars. So we look for shooting stars, hammers, evening stars, dojis, and support, and these will basically help us get trading decisions. So obviously we did get a shooting star there or a hammer, and then the market gave us a confirmation bar. From there the market just went up. Let's come to this area. So the market did come to give us that reversal pattern, gave us a fake below, gave us a reversal pattern. So if you look at this whole candlestick, what is this? This is a hammer candlestick. So if you look at this, this is a hammer. So after this, we got a confirmation pattern. Then the market came into the lows. Even when we came into the lows, we came to actually test this whole level and region around there. So also again using an area that touches most wicks, if you look at that, you will notice that this area was actually quite a level that we could use. So this was a line that got established from this previous market, then the market broke out, came back to retest, and then we kind of reached a little bit. And as soon as we got this close above this level, then this is confirmation that this level is actually holding. You could take entries here exactly on that line and you stop below that line or something, or wait for this candle to close, indicating that we have actually shifted from the support. Then you can take your trades and look at that. Let's see how this then plays out. Look at that. And the market came back to this area. So it came back to this area again, to this interesting level. Then you can see how we actually came again to reject at that support level before. Let me just pause it a little bit. Pause. So you can see how we came to actually reject again on that level, which would then mean your entries are still quite valid, right? Your entries are still quite valid, and then the market just literally left this area. So for me, what I usually do is that every single time the market would come and create a high, I literally mark it out to basically kind of monitor how the market will then behave in future. And if we play this, let's see what happens in the future. So the market did kind of reverse at that level and then broke out, and then probably it's going to come back for a retest around that level. Look at that. So that's a clean retest on that level. Then the market is just like sailing to the upside. So this is what I do, guys. So you would even use this level as your second level of target. So let's pause again. Once again, the market did come create a high over there. Then what do? We draw a line. So if we've got like candles that have similar wicks like that, what I usually do is I draw a line based on the bodies, not on the wicks. If both candles are almost the same length and the wicks are literally almost the same length as well, what I do is I then draw a line on the close and open of the bodies. So you can see that we actually did break out of this level, but then this candle has to close above for us to then see that this level has been breached. So you can use these type of levels for your re-entry. So imagine if you set like a pending order there, so you have to calculate like your spread when you set your limit. So if you've got a spread of 2, then you literally have to like raise up this pending order by 2 pips so that you get like an absolute entry. So you can basically use up these levels for entry points. Look at how that level is kind of holding, right? So you would obviously use these, and also your moving averages. Look at how the moving average was actually spiked over there and used as a level of support. So from this, I would obviously look for buys from this level, from what is happening over here, because then the moving averages are being spiked like that. And when price sustains above moving averages, this means that the moving average did kind of hold. But if I look at this, the market has been ranging for a couple of hours. Look at that. Then the market just decides to shoot up. Look at that. This is a beautiful, beautiful, beautiful practical example of what it is to look out for. Again, someone might say they want to put this line at the highest because then that's the highest point that the market got to, which is also still quite valid. I do use highs as well. And if you look at that, they did come to test the high to the T as well. But let's maybe stick to this area for a minute, right? Let's stick to this area and region for a minute. Let me use a rectangle for this example, right? So this line is a line that touches most wicks. You can see 1, 2, 3, 4, 5, 6. This is an area in which the market spiked so much. So you can see how this level then became a level of support. And also the EMA is also playing quite a major part of this analysis and this trade. So we would have used both this support level and the EMAs, and look at how the market came to bounce off of this previous high, also testing the moving averages as well. So it's important that we actually use all elements that we have learned from this course to basically get to understand the next market move that is about to come. So looking at this, we do have a low, we do have a high, we do have a higher low, higher high, higher low, higher high, and obviously this is a higher low from this previous low, and obviously this high is clearly higher than that high. This low is higher than that low. So what are we expecting? We're expecting the market to continue pushing up. So what we would then expect in this market is for the market to go test that 10800 region and then see what can happen around that market. So 10800 is a level of anticipation for me, and I'm expecting that the market will come and tap that level. However, we do have other elements to look at. So if you really draw like a rectangle from this support level, resistance, 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 you can see that this was actually a breakout and a retest of this resistance level. So I could have even taken entries based off of that level, and let's play and see how this would have played out. So obviously the market did come to test that level again. Look at how we're spiking. Then we broke below. So this whole trade, yes. So this is what I need to even point out. Remember when I said that you wanna draw like a line when the market just pushes up like that and then creates a high, you wanna mark that level to basically see what can happen. So look at this. So we did have like a line there using both wicks, obviously, from this previous resistance, using all like both wicks, this wick and that wick. So we touched both wicks. Look at how then the market failed in future to break above that level. So we did get like two spikes on that level, literally on that level, meaning that the market is kind of failing to break out of this high. So as soon as you see this, then you would know that, okay, like you really want to then monitor this trade carefully before you can even decide closing. Obviously your stops are below this level. If you don't want to immediately close there as soon as you notice that the market is failing to break past the highs, then you can actually like keep on monitoring the trade, and as soon as you got this huge bearish bar, so this is an engulfing candlestick, engulfing one, two, three past three previous candles, three previous bullish candles were engulfed by this one candle, meaning that the market is putting in some bearish momentum. Look at that. As soon as this candle closed, moving averages crossed, and then the market came and tested what this previous high, meaning that the market has actually changed, because then this is a break out of this resistance and a retest, then this would have been an entry even to the downside. Where are we targeting? We're targeting that support level to see if we can actually get to that support level based on how structure is created. The reason why I'm doing this example, this practical example, is to show you that in Forex, we literally let the market tell us what we are trading. We're not deciding on what the market is going to do, but we're allowing the markets to give us direction and indication of where it's going to go next. So we would have obviously taken entries there. We breached the support level. Look at that push to the downside, to the absolute pip. Look at that drop. Absolute pip. We did get to that level, spiked it, then we went back up. Look at that. We came back to retest that level. This would have been a beautiful entry point for more shorts going way to that level again. So as soon as we get here, I wanna notice that is this levels holding or not. Okay, once again, what I need to explain again is these moving averages are not there to basically like, you know, make your charts look nice. These moving averages also do act as a major part and element of the strategy. Look at how we keep on spiking these moving averages. So price keeps on spiking but sustains below moving averages. So when the price sustains and maintains itself below the moving averages, then this then becomes an indication to us traders that this market is basically still on a bearish move, because that the moving averages are literally above price. So again, this area is a significant area of interest that we're looking at, and look at how then the market came to tap these lows again. Using this line, you want to draw a line that covers most wicks. And then look at that. This was a breakout, and then the retest was to the absolute pip. Look at that spike over there. This would have been a clean entry as well to the downside. And then you allow the markets to give you an indication. Look at how we keep on spiking this zone. Look at that. So we got there to the absolute pip. Do you see how we actually came back to retest that level? Look at how we came back to retest this level. Look at how we even spiked that level. So these levels are formed as the market then goes. As the market goes, these levels are formed, right? So again, what I am seeing now is that this level has now become like a critical level, which could probably be a very strong level on the daily as well. So you want to even like pay attention to this level, highlight that level to basically know that if the market doesn't break this level, then you could potentially get more entries to the upside. Look at that spike. Look at that spike. This is price action. Like price is telling you a story. Like this is a story that price is actually printing to you, and you have to basically listen to what the price is saying to you. So based on what is happening right now, I will then be looking for further longs, because then the market is failing to spike to sustain itself below that level. So what I can then do is I will draw a level here also, which will be a level of interest. So I can either get my entries there or here, but however, I need the market to give me a beautiful reversal pattern that I can use to basically get an entry going back to the highs. So let's see how this would have played out. Let's see how this would have played out. So the market broke above. Look at that spike. So we did get a spike. So based on this price action right here, like I will be looking at long. So this would have been an entry for me. Why? Because then the markets did come to spike. Look at that, look at that. So this would have potentially been an entry, so I would have bought here, and my stops would be slightly below that level. My first TP would obviously be this level, this resistance. Obviously I'm not really taking profits, but this is a level that I'm monitoring to see how we are behaving, because then I can see that we're actually failing to break above and below these two levels. So if I buy here, my stops will be below that previous week, and my long-term target will obviously be the highs, which is around about, let's see how many pips. So that's about like 35 pips. And how many pips am I risking? I'm literally risking around 15 pips, if not less than that. So I'm literally risking 11 pips for 35 pips. So that's a 2:1 risk to reward ratio. So let's see how this would have played out. Let's see how this would have played out. Look at that. So my entries are in profits now. So I'm literally monitoring and observing this area to see. So we did breach that area taken out. So we broke out of that level. Beautiful. My TP just got hit. Look at that. Even further than my TP, the market did go. So look at how beautiful this is. So my TP did get hit. This was a 0% drawdown trade if you think about it. Why? Because then I try to work on my entries and make sure that my entries are slick and so smooth, so that I do not have to face major drawdown. So this is where I would have honestly taken my trades. And this is how I keep on taking entries, like on different time frames, like on different pairs. I do the same thing over and over again. Like I really repeat the same thing over and over again until I actually get the maximum result of my entry. So let's see, looking at this, you can see that, okay, this level is kind of holding. Why am I saying that? We did get a break above, then the market did come back for a slight retest, and then the market is sustaining below. So I will wait for the market to even revisit this high and maybe tap it for the last time. Then I can then look at selling this market back to the lows. So I'm going to wait for the market to come and touch. So it did not come and touch. So this would have been one of those trades. Oh, again. So if they don't come and touch this level, then I am not going to trade this pair, all right? However, I'm going to look at other elements for me to basically get entries. What are the other elements that I'm talking about? So we spoke about you marking out this zone as soon as the market breaks it. So draw a level and an area that touches all 3 wicks. So if the market leaves a spike around this level, then this would be a beautiful entry point. So let's see how the market behaves. Look at that, look at that. They did actually come to touch that level to the T. Look at this, they broke out, they now came back to retest. Look at that. So look at that, look at that. So the market is kind of like faking above right now, which would really like annoy me, because remember that if we came in here, our stops would be above the previous high, right? So stops above previous high if we came in here. So the stops haven't really gotten touched, but the market is kind of like ranging around this level, but structure is still holding. So I'm not going to be closing these trades until my stop is hit or my TP is hit. Structure is still holding. However, the markets are like kind of raging around this level. So I want to see how then the markets will behave in future. Look at that. We got a shift bar from that level. Then the market is kind of like crossing both EMAs. Let's wait and see. So moving averages are still above price. Price is spiking to the lows. Shift bar. Look at that. The market is just sailing nicely to the downside. Let's wait and see. Let's wait and see. So the market will then come to this level according to what I believe, because then I'm targeting that level long term. So don't forget that, right? So I'm targeting that level long term. Is this where price currently is? Okay, I think that is where price is today. No, that can't be. Can't be, bro. Can't be, bro. Can't be. Can't be where price currently is. Okay, this is where we actually stopped. This is where we actually like stop the price. So let me just exit this and then just like go back to show you that this would have been my target. Where is that area? Yeah, so this is where we were working. So then look at that. So this was obviously my target. Look at how then price came and ranged around this level. So I marked out this level to basically get to understand what can potentially happen next. So using all wigs obviously, and again I'm gonna mark out like this area to basically kind of like understand what can potentially happen in the future as well. So look at how we actually came and spiked that level, then we did kind of like see a major drop on this pair. So this would have been a re-entry. So my first entry would have been here, stops above there, got a couple of hours of ranging markets, and then the market decided to eventually come into structure, came back to test this high again, then we actually came back into structure. We went and we breached that TP, took it out to the absolute pip. So this is how I will then deal with entries, guys. This is how I would then deal with entries. So now let's go to current market, because then I would really want us to get to understand how we use these techniques using current market. So obviously, you guys, as you know, we do have these levels marked up from our previous markets, and then there's levels that we draw on the daily, as I did say. So we do have monthly levels, we do have weekly levels, and then now we want to draw daily levels, right? So monthly, weekly, daily, all of those we draw on the charts to basically get to understand where price can potentially go next. So I will be drawing my levels on the daily. So the daily level is a level that is quite common on the daily. So daily time frame is obviously like a larger time frame compared to the H4 and the H1, and levels on the daily are much more stronger than the smaller time frame zones. However, we are keeping our eyes focused on the larger scale of things. So looking at this market, right, from the larger scale of things, where is this market trending? Where is it going? That's the question that we need to ask ourselves. Where is this going? Right, so if we go to the weekly time frame, let's go to the weekly and let's get to analyze this pair, let's get to analyze this chart thoroughly. So if we look at this, we do have significant lows being created. If I look at this market, I am honestly seeing like significant lows being created. So if I draw that line, I can see that this market is quite trending down. However, the lows are being stubborn. Like the lows are not being printed like, the way they should. The market is sustaining and holding specific levels on the lows. So I will be removing that trend line because I know where the market is going, but you guys can keep it on your chart so that you know. So this area over here, this area that I drew on the daily is quite a significant area, because then the market keeps on failing to break past that low. It keeps on failing. Oh my goodness, I'm looking at another chart right now and I kind of missed my entry. My God. But anyways, so the market keeps on failing to break past that that level. So the market keeps on spiking once, twice, thrice, and the fourth time. So the market then came back above. We sustained above this level 10600, which is quite a strong level because this level is from the monthly. Again, do not forget. So monthly levels are quite strong, and we use those to basically understand how price action is actually set up. So the market is sustaining above this level. So look at that. One tap, second tap, and the market is just sailing to the upside. So we did come and tap this level twice, right? Once, twice, and then it's actually like sailing to the upside. So let's go to the daily. So what I'm looking at on the weekly is that this level can come and get like a revisitation from the price. Looking at how this is actually set up, we can see that this market can actually come and tap 10800 again. So we want to go to the daily to basically understand if we can actually go up there. And looking at the daily, look at how we actually came to spike that level and then came back to the lows. Why are we coming back to the lows? There's a level on the daily from here. So I'll be using a rectangle to actually like get a median point and a median zone on the charts. So we do have these highs. So 1, 2, 3, 4 times, and then 5, 6, and then the market broke above, came back to tap 1, 2, 3. So this is indecision. Like this is indecision. So today's candle can close like this. So if we get a clean close on today's candle, then this will confirm to me that this market will actually go up. However, I do have something in me that tells me that we can potentially break above this zone, and I want to draw a Fibonacci to basically understand if this is one of our levels. And if I look at this, also again, UJ loves 38.2, right? So UJ really retraces a lot to 38.2%. So we want to actually understand that can this price actually leave this area to go and give us our beautiful target at the top there. So I will be using a different color for that. Let me just use that yellow line to basically understand that this is where we're headed to 1087T3, 108700. So that's where we're actually headed to. So if I come to the H4 now, I can then anticipate a bullish run. Also looking at how strong this run is. Remember that this is a daily level. Again, this is a Fibonacci level. So what I am looking at is that the market did come to this level, and we are sustaining above. So the market did come to basically create first bottom and the second bottom. So what I am looking at is that the market will come to the highs. So this is what I am looking at, right? So this is what I'm honestly looking at. So the market will come to the highs, break out of these highs and retest the highs. Then if we get a clean retest to the highs, then I can then take a beautiful buy from this market, because then I kind of missed entries where the market is right now. So I will then be looking for entries around there on this level. Then we target what this level for the first level, because we know that from the weekly this is actually like a very strong level, 10800. However, our Fibonacci tells us that we are going to break above this level. So what we're looking at right now is that we're going to come and break above that level. Again, what do we have on this chart, right? So on the H4 we do have this trend line. So this is what we have on the H4. So this trend line, we can't ignore this trend line. We can't ignore this. So this can be some kind of an element that we actually add on to everything else that's happening here to basically understand where we can potentially head to. So if I look at this, I can clearly see that we are actually like on a bullish market looking at this whole structure. So I will then be waiting for the market to come and break out of this high, then come and retest this high. Then I will be taking this entry to the upside. So this is a beautiful example of how to use this tool to basically get further entries to the upside. So this is how I would have used this whole analysis to basically understand. So if you guys try to like get to understand how I got this sentiment, is I started on the weekly and I started on the monthly, weekly, and I went to the daily to draw this daily level. So this is quite a strong level. That's a daily level. Then obviously I am using this to basically get these smaller time frame levels for entry points. And then if we break out of this level, then we can actually get like a beautiful push to the upside. So that's what I will be looking at on this market. And I hope you guys actually got to understand how I did all of this to basically get an entry going up. So other than that, guys, I will see you guys on the next phase. So the first phase is done, because then this is the last video that we have on the first phase. And I hope you guys are really learning from these videos. So I hope you guys actually get like to understand a whole lot of things using this strategy and this method, and to get to understand how to basically create trades of your own. So this is with love, this is with motivation to you guys, that you guys must actually push yourselves further. Anything is possible if you put your mind into it. So let's put our minds into this, and let's make sure that we achieve everything that we deem to achieve. Beautiful week to all of you guys. Cheers.